Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, August 8th, 2024. It's 2:28 right now as I'm starting the video, so we've got an hour and a half left in the trading day and wanted to do an update. I'm going to keep this one short and just focus on the two kind of main things I've been trading lately. And that is natural gas and the equity markets. The equity markets, I'm going to start there because we're at a level now. We're at resistance and looks like a good opportunity for a quick active trade pullback. I actually took a shot here, posted a chart on the comment section today. You know, as far as somebody asked, I think they're talking about long-term trades. I'll get to that in a second, the swing trend trades. But this is just a 5-minute chart of NQ, and this is since that low on Monday. We've had this very well-defined trading range, and you can see here all these little divergence lines down below. Positive divergence at the low gives you that rally. That's negative divergence correction. Positive divergence up to the top. Negative divergence down to the bottom. Negative divergence down to the bottom here. That was yesterday. That's the bottom of the support range. We had that little, like I said, I put a little update in the comment section. We had you know, at the end of the close on any given day, especially on a big move day, you have a lot of position squaring. The ETFs have to then square away with the inflows and outflows they've had for the day by 4 p.m. So you'll see a lot of movement usually, and sometimes you'll overshoot. And that's what you did. You see a slight overshoot of the bottom of the support range yesterday to put in that nice divergent low. We had positive divergence heading into there, and then it got a little bigger, and then it gave us this rally here today, which is now culminated with this divergent high. You can see right here, this is your 5-minute negative divergence. Here, let me zoom in. I know it's hard in the video sometimes to see this. So that's it. So we had a divergent high here. That's where I posted it just a little while ago. Little break, and we pushed up, made a marginal new, and still very much divergent high here on this 5-minute chart. And what you can see here, potential targets. So we go back to the bottom of the range. You have an uptrend line right here and price support here. So I had a little dash, you know, solid arrows are usually my preferred scenario with, and that's point dotted arrows as an alternative scenario. Now, it depends, see, over time, it depends if we zigzag down. This uptrend line could come in with this price support there, 18,240. Of course, a break. You know, right now, we're not going to run that much higher today. We've hit about, there's no hard limit, but a daily limit on QQQ. 3% is usually, when volatility is high, about it for the upside. Again, not to say it can't go higher, can't go any lower than that, but that's usually about it. So it, you know, the way it works, it's expended a lot of fuel to get back up to the top of the range, just like it expended a lot of fuel to get to the bottom of the range yesterday. And see on the drop there. So that's kind of a, you know, it's a mean reversion trade. Now look, we can certainly break above there. You know, I was going to do an end of day video yesterday and tell you that I was favoring, and I didn't say it, and I feel like you know, whatever, it didn't matter, that the employment numbers would probably come in better than expected. I think there was so much, well, we know there was from the last employment numbers when the market took a bath on that, and, you know, those that didn't see the tick up in unemployment coming were shocked. And, you know, so it was priced in that, oh, the worst case scenario is all we had to do is just come in a little better on the economic numbers to trigger a rally. But again, it's also, this is noise, guys. This is, you know, the 200-day moving averages are still above those. I'm going to get to the swing trend trading part in a second. I'm just talking active trading stuff here. So that's an opportunity there. You know, and when you get this close to those highs, you know, just like you get that close to lows, they may punch it through today. And if they do, let me give you some upside targets here. This is a 5-minute chart of ES. I just was on NQ. Let me show you. So that's where we had, let me zoom in real quick. If I can do that. There we go. So this was yesterday where we were when I pulled the plug on that bounce trade on QQQ, revised the second target down to current levels, and then we had the big drop. And then you can see, just like on NQ, we put in a nice divergent low in the right after the market closed and worked our way up. And even here, you see a little wedge break there, a little pullback. And that's it. So now we have the most recent near-term overbought conditions with a divergent high right there. So pullback target on ES, and I'll watch it. You know, I'm not trading ES. NQ is my proxy lately. Go to trying to do a trend line here, guys. Let me do one there. So you got a potential, a minor trend line there, and then a deeper one that comes in there. Really nice support down here around 52.39, and you know, different levels along the way. Traders look for these reaction lows and reaction highs. So either way, this is about it for the day. This has all the makings of a trend day, but again, we're too stretched, you know, to continue higher at this pace. We're looking at a 4% close in the Nasdaq maybe, and I don't think that's going to happen. So I think we'll get a little about a profit taking here before the close. VIX, wasn't meaning to cover this. I had VXY up. I did cover it in yesterday's video, I believe, and I've covered it quite a bit lately. We had the long entry here, hit that T4, decided there was weekend coming, took the profits out, and then on Monday when we had the drop in the market, we did hit that former T5 to the button reverse. And as I said yesterday, and there was a bounce trade to be made on the initial pullback to T4. We're there again, so that's support. So what I can tell you, as I said yesterday, this is an objective level of the market. This you know, we're still above the 200 days. So I'm not getting, and somebody asked me, and I'm going to segue into the swing trend trades. We're right where we were yesterday, but that's the price level that I've started to add back some swing shorts. And as I told you, I have a bounce range. That's what I also mentioned in that comment in the reply today, which I'll get to in a second. It's up to the downtrend lines in QQQ, which I can easily still see happen. So that's my preferences, and I'm not going to add back at the same level I added to yesterday. That's just doubling up on the same price point, and we're still above the 200. So we can go up to the top of the range, which I'll get to in a second. And so just like QQQ, which I'm about to get to for a swing perspective, not that active trading stuff I was just talking about on the 5-minute chart. From a swing perspective, if we go up to hit my max bounce targets, then we're probably going to come down to this uptrend line. And again, I covered this yesterday or the day before, and or that former T2 level, and that's VIXY. Now I'll be watching the VIX futures, the spot VIX as well. So just like I have on QQQ, an upside a minimum, which we're at on QQQ, and maximum bounce target, I have the same thing here for the VIX if you want to re-enter that VIXY trade, or even just game it off these levels. Now let's go back over to the 60-minute charts. Well, let's start with the daily. Look at big picture. We can go even to the weekly if we want. There's a weekly chart of QQQ. I'm sorry. And this is where we're at right now. I know this one's hard to read, but we're still at that same resistance we were yesterday when we reversed and I pulled the plug. These were the downside targets here. T1 was from the short up the top. T1, T2, when I zoom in, they kind of just move these things around. You can see there, T3, 4, 5. And so this was that, you know, Monday's intra-week break, and we're going to close the week most likely above the 200. So again, you can't get too bearish and too short right now. You can if we push a little higher. Like I said, if we backtest on the weekly, I still could see a potential backtest of the trend line. On the 60-minute chart, I have a downtrend line, which comes in before that. Right about there. So this is kind of, you know, yeah, certainly in the realm too of the potential bounce target zone, the back test of the trend line. Here's where we're at now. All I can tell you definitively, we're at resistance. We've had some powerful sell signals, a lot of evidence of a top, and so I still view short rallies back into resistance as shorting ops. Now it depends on what time frame you're looking at. This is a weekly chart. Now we'll go down to the daily. You can see it clear on the daily. There's that intra period cut, and then we parked right back on or in close proximity to the 200-day. We're above the 200-day moving averages. Those are the red and blue lines on QQQ. We've rallied back to resistance again. So there's the this is the same just on a daily chart. This has the same trend lines and targets as that weekly. And then here's that 60-minute that I was covering lately. Let me zoom in. I know it's messy here. This is the old, let me just move this over. That was the former T2. That's yesterday where I pulled it down, closed that trade out, the sidestep that give back here. And now we're back there, and that's where I revised it to yesterday, right at the highs. And we're back to that level again. In the circled area, here's the downtrend line. So this is still, you know, again, it doesn't make any sense. Really from we're not, if you're, you know, one, two things, either scale in on strength up to really kind of, you know, not at this point in time, not above that trend line. That's just kind of my plan as of today, but you know me, I'll modify plans. I'm also looking at that weekly chart and the primary uptrend line that we could carry up to. But as of now, this is where I'd like to add any more swing shorts, get higher up in this range, maybe to that old T2 revised level or up here. Like I said, I think a quick pullback trade can be made here. And, if we start moving lower and this proves to be the end of the rally, then I will add, once I'm convinced that the bounce is over. But like I said, you just can't get too aggressive when you've come and visited the 200-day moving averages for the first time, as I've mentioned repeatedly lately, for the first time since October of 2023, of last year. It's the first pullback, and we came down from about as high as we were up above it. We were way up above the 200s, and as I said, it's just kind of a mean reversion trade. It's almost like gravity. You get too far away from the 200s, you're going to come back and visit them, even if the trend is ongoing bullish. And also, when the market tops, the first thing you're going to do is come back and visit them, and the buyers, like Pavlov's dogs, are going to step in and buy. Now, you can bounce for days, weeks, somewhere in between if you're going to take them out. But that's it. So we're still above them right now. And here, I can even show you. This is a nice tool I always use. I don't have all my indicators up at all times on these charts, but one of the lines I have here is this one here. You look down at the bottom. I'll have to make it bigger. I'll squish this one. This right here is the percentage above the 200-day moving average. Let me drag this up here. Let me do this. Move it up here. Percent above 200-day moving averages. So you can see right here, this is about, as I just showed you visually, but you can see it here. This is the percentage trading above the 200-day. So you can see that's a successful back test of the 200s. And as I've often talked about in a bear trend, you test them from below. Sometimes you'll punch through them for a day or two, maybe a week at most usually. And then that keeps the downtrend going. So if my analysis is right, within the coming weeks to months, especially the coming months, we're going to be down here, and then we'll be looking on, when we're going long counter trend rallies to maybe close those on back tests of the 200-day moving averages. But right now, like I said, you have to respect this is a test. But once we clearly take out those 200s, then we'll know something else is going on. And as I've repeatedly stated, the odds for my deeper targets to be hit that I have much lower on will go up substantially if and when these 200s are taken out. So that's kind of a quick overview on the NASDAQ 100. So I'm going to keep the video short, like I started with on the 5-minute charts. I showed you resistance levels and divergences. Here's a 5-minute chart of QQQ for your ETF traders. There's your most recent divergent high. You can see here, that's the RSI on top. There's a PPO on the bottom showing you the divergence. Wash, rinse, repeat, guys. Divergent high, correction. Oops, nope, arrow. Correction, divergent low, rally. Divergent high, correction, right? Until last week, that's the current MO. And again, if we break above this trading range with conviction, more than just a brief pop above and then a rejection back down. And as I often state, I state this on all time frames, weekly, daily, monthly, even the 5-minute charts here. Breakouts that occur with negative divergence and overbought conditions, because you're overbought on the short-term time frame. This is a RSI on this 5-minute chart we're on right now. In this 70 level right there is your default overbought rating, as you can see. Overbought in itself is not a sell signal, but when you get overbought with negative divergence, that's usually when the turn comes. Okay, so that's what we're looking at. I'm going to move over to UNG real quick, and NatCast, I've been giving you pretty frequent updates on those, but we have the on UNG. Earlier we'd hit the comparable target on the futures on NG. I'm sorry. The 60-minute chart is where I laid that trade out for UNG traders, and then shortly after we hit it to the button. So the high today on UNG was 1442 versus my target of 1443. Again, I always state sell a little shy of the resistance level you're targeting in case the sellers step in early. So that's effectively a perfect hit, or we'll call it 1 penny shy. But and again, we'd already hit the comparable target right there, right before that on the futures. And it's wash, rinse, repeat stuff, guys. This thing's just paying off in spades. You had the pop yesterday. You hit T1. You give active traders a quick chance to take profits. Recycle back in on the pullback back to the breakout point, R1, 381. Went up to T2. And look, what did we do? We pulled back to T1 plus this downtrend line there. And yes, that is the next objective entry or add-on in case you missed it. Now, sooner or later, we get up to these deeper targets and it's not so, you want to start then, start booking profits or raising up stops. You get closer to the final target. And these are just kind of near-term targets. They're my near-term preferred targets. But again, this is still where it's objected to buy these pullback to supports, what I'm trying to say, and or sell pops into resistance. We've already had a couple pullbacks to the first support levels. The nature of natural gas, once it starts to get going, and the nat gas traders realize you're in a new uptrend, you'll start taking out previous highs is what they want to see. Then this thing just doesn't let the shorts out or the longs in. So you've had bottom line is since the breakout. You've had a couple pullback opportunities to add to or build into a position. Nothing but check marks across the board. Look, it is natural gas. I call it the widowmaker. Just sometimes when it starts to look good, she craps out on you. So don't get married to it. The stops, depending on where you entered, that's where your stops are going to be based on your average cost and how you're trading it. But at this point, as I've said with the futures and everything else, at least... this was the breakout point, 203 plus the downtrend line. There is a downtrend line there. It could be back tested. The problem with back testing trend lines is they come in at lower and lower levels every day. So, stop somewhat below that 203 level, at least. It's still now, because we're not too far away from it. That still seems like an objective level. And, if they run the stop and then it still looks good and it back tests, I'll highlight the back test as maybe the next objective reentry. So, there's your update on that, and I'm gonna stop the video, get it out to you guys, and focus on this rally right into that previous high there with the negative divergence, and see if we can get a little pullback trade going here in NQ. Yeah, and I will wrap it up here just to jump out those 15-minute charts. We're back to that same level again yesterday, which was a 50% Fibonacci retracement in NQ. And on ES, also the 50% Fibonacci retracement. So in other words, we retraced, as we did yesterday, half that move. The fact we're back to it again after getting rejected means that, they might want to punch it up now. It's kind of the feel that I'm getting and run it up. Whether, I'm looking for a little pullback first, most likely. Not guaranteed, but the 61.8, and that's really good resistance too on the 15-minute chart. It shows well on the 60, and I'm talking about right here, about 54.30 or so on ES and on NQ on the 15-minute chart. 15-minute, I'm sorry, the 61.8 is at 61.8% Fibonacci retracement. That is at 18,815.75 or so, and I have some price resistance coming in a little shy of that, about 18,764. So should the market carry up, whether we pull back first or not, that would be a level where I would be interested in adding back some swing short exposure. Oh, and then you have the primary downtrend line off the highs coming in right there as well. So it's all, still what I covered before. This is kind of my minimum and now maximum kind of bounce target or my target range to get back into those shorts. All right, I'll wrap it up here. This has been Randy Finney with the right side of the chart. Have a great day.